Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures pushing higher as Oracle shares surge after a blowout outlook in its latest earnings report. Equities are set to open at record highs again following the results, which offered a robust forecast for Oracle's cloud infrastructure business. Wall Street forecasters are now rushing to boost their outlooks for the S&P 500 amid renewed enthusiasm around the AI trade. Deutsche Bank raising its year-end target for the S&P 500 to 7,000, implying gains of more than 7% from current levels. Meanwhile, Barclays also increasing its forecast, and the team at Wells Fargo Securities expects gains of 11% by the end of next year. Plus, the latest read on inflation out this morning. Wholesale prices fell in August. The producer price index showing an unexpected drop. That reading marks the first decline since April and adds to the case for the Federal Reserve to cut interest rates. Consumer price data due Thursday will offer insights on the extent to which tariffs have made their way to American households in August. And President Donald Trump has been temporarily blocked from removing Fed Governor Lisa Cook. A U.S. district judge concluded that alleged mortgage misconduct likely did not amount to cause to fire her under the Federal Reserve Act, and that the way in which she was dismissed likely violated her due process rights under the Constitution. That ruling means that Cook can stay in the job while she challenges efforts to oust her over allegations of mortgage fraud. It also means that Cook can likely attend a highly anticipated Fed policy meeting next week to vote on whether to lower interest rates. Let's get a check in on stock futures right now. As we mentioned, it looks like things are going to open at records, but that's not true of the Dow. Of course, we are seeing a little bit of a decline there. Futures indicating a drop or very little change really at the open, but slightly negative open for that index. But the S&P and the NASDAQ futures indicating gains of about 0.5% at the open. Let's dig into our top stories of the day. Stocks continuing to trade near records, leading to a wave of price target boosts across Wall Street, and PPI showing wholesale inflation cooling ahead of the August consumer price index out tomorrow, plus a judge blocking President Trump's attempt to fire Fed Governor Lisa Cook. Joining me now, we've got senior reporter Brooke DiPalma live at the NASDAQ, Fed correspondent Jennifer Schonberger, and Morning Brief Market Sunrise host Ramzan Karmali. Thank you all for being here. So let's talk first of all about these records where we're set to open, Brooke, and this now wave of renewed optimism that we're hearing about from strategists.
Julie, on Tuesday, the Dow, S&P 500, and the NASDAQ all closed at record highs. And now we're seeing the S&P 500 and the NASDAQ really holding on to that momentum in the early innings of this morning, especially as we got that jobs revision out on Tuesday that really solidified the case that we could see a September rate cut. In addition to that, we also heard, the wholesale inflation did unexpectedly drop for the first time since April. That also solidified the case that's contributing to futures moving higher this morning. And on top of that, too, we got this key report from Oracle last night that really solidified this AI trade. And that is really what led to S&P 500 targets being raised this morning across multiple firms. First, we heard from Deutsche Bank, Binky Chadha. He raised his S&P 500 for year end to 7,000 points. Now, that implies a 7% gain from where we are right now. We also heard from Barclays. That firm raised their year-end target for the S&P 500 for the second time in just 3 months, now to 64.50. Now, the Barclays cited stronger than expected earnings. They also cited resilient U.S. economic growth and that key artificial intelligence trade really rallying the S&P 500 to that year-end target.
Yeah, dig into Oracle a little bit more for me here and why that is seeing such enthusiasm in the market this morning.
Such enthusiasm in the market. In fact, pre-market trading, it's up more than 31%. I'm looking at now up more than 32% in pre-market, according to Yahoo Finance data, as you can see right there on your screen. And what's really rallying is, get this, the company actually missed on both the top and bottom line. But investors right now are not focused on that. They're solely focused on the revenue outlook around AI. And what the company had said was that the AI-fueled cloud revenue is expected to jump to $144 billion billion by fiscal year 2030. They said that this year alone, Oracle's cloud infrastructure revenue, well, it's expected to grow 77% from last year to $18 billion. And so investors are really, really excited and optimistic around the AI component of this business and what exactly demand will look like. And even get this, overnight, from when the company reported to this morning, Oracle's market cap grew by $212 billion. That's actually larger than Disney's market cap alone.
Wow, that a good eye-popping stat. You win the prize for that here this morning, Brooke. Speaking of enthusiasm that we're feeling in the markets here, Ramzan, I wanted to get to you and on the coming IPO that we are awaiting from Klarna, which is expected to start trading today, just sort of adding to the more, the opening up of companies coming back to market and the sort of, that it feels it can come into this market because there is obviously appetite for some risk here.
Yeah, this is going to be one of the biggest IPOs on Wall Street this year. And possibly it's confirmation that fintech is staging quite a bullish comeback. Now, Klarna is debuting today, we think, priced at $40 per share. That's above its initial guidance of around $35. So that makes the company worth $15 billion. Klarna's going to raise $1.37 billion with this IPO. It's been oversubscribed up to 25 times. So that shows there is strong demand for it. The ticker is going to be obviously KLAR when it starts trading. Now remember, it's quite a bit of an up and down story for Klarna, let's be honest. At one time in 2021, it was valued at $45 billion, but just a year later, that it was worth less than $7 billion. So we're now somewhere up from that low of 2022. So it is moving in the right direction. And also, the firm is also looking to diversify way beyond the buy now, pay later model that it's everyone knows it for. So it's trying to move into debit cards, saving loans. It's even looking at a US banking license as well. So one of the things, though, that I think helps Klarna is its name recognition, and it does give it a big advantage in what, let's be honest, is a pretty crowded, competitive sector. And if the price holds and it goes for gains, then people will say, look, this is the right time for it to come to market. But that said, there are still profitability concerns around Klarna, and also these buy now, pay later models, they're under immense amount of regulatory scrutiny right now as well. So yes, Klarna might be signaling that the fintech sector is back with this IPO, but we'll have to really watch it closely to see whether it can carry on making gains.
Yes, we will indeed. It's going to be a really interesting one to watch when it starts trading. Let's get to the macro side of it and get to that wholesale inflation data that we got this morning. Jennifer, I want to go to you on that because this does not paint a stagflationary picture, the data that we got this morning.
No, it does not. It certainly helps the case for a rate cut, doesn't it? Those wholesale prices, the producer price index, clocking in much lower than expected on a core basis year over year. That was 2.8%. We're expecting 3.5%. And by the way, that compares with 3.7% in July. And if you looked month over month, we actually saw a decline of 0.1% on both the headline and the core basis. And just to put that in perspective, back in July, month over month, we had seen nearly a full percentage point increase. So this is a big surprise, a big reversal. Clearly a lot of volatility in this data. But as I look through this report, and I'm still piling through this, it seems like firms are really eating those higher costs. Whether it's tariffs or on the services side, we saw margins really take a hit. And so that tells me if this trend is going to continue, we're really not going to see higher prices being passed on to consumers. That's going to put a lid on inflation. And that also tells me that perhaps companies are not able to pass on costs to consumers. And this goes to the weaker job numbers that we've been talking about. And I've said it before on our air, and I'll say it again today. If people don't have jobs or they're worried about keeping their job, they're not going to have money to spend, or they're going to pull in their horns. They're going to pull in their spending. And so it's going to be curious to see, this is just one number, whether we see this borne out in consumer prices and in the future months to come. If that is the case and we don't have an inflation problem, and we're seeing deterioration in the job market, then I think that accelerates the size and timing of rate cuts as we go through this year into next year.
Right. And of course, the backdrop for the economic data is us awaiting the Fed decision next week, and also maybe a little bit more certainty as to who's even going to be in the room making that decision.
Yeah, that's right. As you mentioned at the top of the show, a federal judge late Tuesday blocked President Trump from removing Lisa Cook from the Federal Reserve Board of Governors. So she will be in place for the meeting next week, and U.S. District Judge Gia Cobb basically said that the president, with the allegations of mortgage fraud, didn't have for cause to remove her. We got a statement late last night from Lisa Cook's lawyer, Abby Lowell, saying that, quote, this ruling recognizes and reaffirms the importance of safeguarding the independence of the Federal Reserve from illegal political interference. Allowing the president to unlawfully remove Governor Cook on substantiated and vague allegations would endanger the stability of our financial system and undermine the rule of law. And this morning, I'm getting a response from the White House spokesman Kush Desai telling me, quote, President Trump lawfully removed Lisa Cook for cause due to credible allegations of mortgage fraud from her highly sensitive position overseeing financial institutions on the Federal Reserve Board of Governors. This ruling will not be the last say on the matter, and the Trump administration will continue to work to restore accountability and confidence in the Fed. So as expected, probably going to see an appeal from the president and the administration on this. But for right now, Lisa Cook keeps her job. She will be on the Fed next week to vote in this meeting. And typically she has voted alongside Fed Chair Powell. So if they are moving forward with a rate cut, I would expect her to vote in favor of that. At the same time, just want to mention that the Senate Banking Committee this morning at 10 a.m. is expected to vote on the president's nominee to the Fed, Stephen Miron. He is, of course, would replace former Fed Governor Adriana Kugler, who stepped down in August. And I do expect him to pass out of committee along a party line vote, setting up a full vote in the Senate, a floor vote, likely on Monday, and I do expect that to pass. So Miron likely in place just in time for the FOMC meeting next week. Of course, he's in favor of lower rates, so he would vote in favor of that. If for some reason the Fed didn't pull the trigger, we would see a dissent there.
We'll have to wait till next week to see. Thank you so much, Brooke, Jen, Ramzan. Thank you. Coming up, we're going to count you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's trending tickers. We are watching Synopsys, Novo Nordisk, and Chewy. First up is Synopsys, the chip design software maker, plunging after warning that U.S. export restrictions are contributing to a slowdown in China. That's the largest market for semiconductors. The company's CEO also said that a push to develop its own intellectual property is not achieving the desired results, partly because of the China challenges. He also announced he'd be refocusing resources on other areas, and he's also reducing the company's headcount by about 10%. Next up, Novo Nordisk, the maker of Ozempic and Wegovy, will slash 9,000 jobs globally and cut its profit forecast for the third time this year. The announcement comes as the company looks to recover lost ground to competitor Eli Lilly. With the 11% reduction of its workforce, the company aims to save $1.3 billion by the end of 2026. Those shares down 60% in the past 12 months, which may be why the shares are not moving more this morning. And finally, Chewy, the retailer for pet products, sliding after reporting second quarter results. The company's profit fell in its fiscal second quarter despite an uptick in sales. Chewy said its bottom line was hurt in the recent quarter by a $79 million expense tied to share-based compensation and related taxes. As always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, strong guidance from Oracle powering stocks to new highs and leading to a wave of S&P 500 price target boosts. And my next guest says this bull market deserves the benefit of the doubt. Joining me now, Keith Lerner, Truist Chief Investment Officer and Chief Market Strategist. Hey, Keith, it's good to see you.
Hey, Julie, great to be back on. It's been a little bit.
It has. And, it's funny that you came out with this note and said this bull market deserves the benefit of the doubt, because then stocks went on to continue to make new highs. And we got this Oracle news, which sort of confirmed that. But when you talk about giving it the benefit of the doubt, basically, are you saying that despite some of the headwinds that are out there, that there is enough positive, there are enough, advantages that are outweighing what could stop it?
Yeah, I mean, you basically said it. If you think about the last couple of years, I mean, this market has had to deal with a lot of different narratives. We think about inflation, interest rates, tariffs, and each time, we've seen companies adapt and come out the other side somewhat stronger. So listen, there is risk. I don't want to say it's Pollyannish out there, but I think what we're seeing, especially as you mentioned with the Oracle earnings, is that this market continues to earn that benefit of the doubt. And to me, Julie, really what the key, the dominant theme of this bull market that we've been talking about for the last few years is AI and technology, and that's where the strongest earnings growth is as well. And we're seeing that validated once again with this latest report.
I mean, it almost seems like, we keep talking about concentration risk, et cetera. It almost seems like investors should just be in AI and that's it sometimes, the way that these things are going. And at this point then, what's the argument to not just go all in that direction?
Well, because the future is uncertain, and there could be, something comes out of left field that we're not expecting. Maybe there's some competition. Maybe there's something from policy side. And we also have to remember, even though we like AI, we're overweight tech, we're overweight communication services, we had a period back in the late 90s where, after those stocks peaked, they didn't do anything for a decade. So the reason why you diversify beyond just the mega cap stocks or a growth stock is because you don't have, a perfect future. And the narrative that we're talking about could change, even though we're talking about probabilities, and the weight of the evidence in our work is still supportive of those mega caps. Maybe, Julie, if I can, the concentration is an interesting question. I have a couple maybe stats if you're okay with it that I can share with the audience. The one thing, when you think about the Mag 7, we think about 7 stocks. But the reality is, if you look at these companies since they IPO'd, they've taken over 800 different companies, right? So it's not the Mag 7, it's really the Mag 800, if you think about it that way. So they're more conglomerates in some way. That's number one. And then number two, we just published a report and we looked at the top 10 concentration across global markets. And the U.S. is not at the top. I mean, we have other countries like South Korea, Germany, and so forth that have actually much more concentration and bigger stocks as well. So yes, we have concentration risk. Yes, it's big relative to the U.S. history, but globally, it's not that out of line. And then lastly, to reiterate my point is, these companies are actually conglomerates, not just 7 companies.
Yeah, I guess everything is relative, right? It's a useful point to look at other markets. I mean, one other stat that stood out to me about today, that one of my producers pointed out, is that Oracle is set to potentially have its biggest one-day gain on a percentage basis since 1992, which is incredible. But also, whenever anybody goes back sort of pre-2000s or 2000s, dot-com bubble and talks about that time and before that time, they're usually talking about the word bubble, right? They're talking about frothiness in the market. And so I wonder how that feeds into your market view as well, and where you look for signs of potential froth, what froth even means to you, and whether you're concerned about it.
Yeah, and I started my career in the mid-90s, so I was very accustomed to these big, single-day pops. A lot of those pops back then were IPOs and with companies that added a .com to the end of their name, and it wasn't earnings-driven. So what do we see with Oracle? They said today that their bookings went up 359%, right? So the reason why the stock is having such a big pop is because they're adjusting for earnings that are much stronger. Now, again, I don't follow the stock day to day, so it's not a recommendation per se, but that's earnings driven. And then as I kind of zoom out a bit and say, let's talk about the technology sector. On a year-over-year basis, at the recent high, the tech sector was up about 36%. That's a lot. But when we go back the last few decades, the trouble spot, more of a bubble area, is when we're on a year-over-year basis, we're up 100%. So, in that perspective, we don't see a bubble. And then lastly, it's all about earnings. The earnings trends relative to the market continue to be stronger in tech. And if you overlay tech's performance, that's driving it. In our view, where we get more concerned, which we'll continue to watch, is if those earnings start to move down or the rest of the market catches up. We're just not seeing that in the data yet.
So all of this bullishness said, Keith, at the same time, you still also recommend an overweight in gold, which says to me, and you call it a diversifier in your note, and that says to me that, yes, everything's great and you're pretty bullish, but maybe you want to, kind of hedge a little bit.
Yeah, I mean, we're positive on the overall market, but we all know there are a lot of potential headwinds. And going back to the question earlier, the future is unpredictable. You can have a scenario and you can look at the weight of the evidence and the data. That's how we make decisions. But you don't know what tomorrow brings. So you want to have things in the portfolio in case an outcome changes. And we've been positive on gold all year long. It's actually up, more than tech. It's up, 40% this year. And after moving sideways for about 4 months, it just broke out recently again. And you're seeing central bank buying. And when there's some questions about political instability, the change in kind of the U.S. on the global scene, you're seeing central banks around the world increase their holdings of gold as well. So to us, it's a modest position, but we still think it's a good diversifier. And the last point is, when we've seen days where stocks and bonds are both down, we're seeing that gold is actually providing good diversification, being up on those days, providing that offset the majority of time.
It's always good to have that in your portfolio. Keith, thank you. Good to see you.
Great to see you as well. Thanks so much.
That does it for Morning Brief. Much more ahead on Yahoo Finance, including opening bid. Keep it right here.